Welcome to That Annuity Show, the podcast that will make you an expert in explaining annuities to your clients. Give us 30 minutes each week and we'll shave hours from your client presentations. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler, and welcome to another episode of That Annuity Show. Ramsey, glad to have you here.
Great to be here.
Yeah, and Laura, this will be our Retiretech episode. And before I introduce our very special guest, tell me what are the headlines about Retiretech?
Yeah,
over
I
the
would
last
say
few months.
For sure. We have some, I'd say we have two key headlines here. So first of all, thank you to everyone who was able to join us in Vegas or is caught up on the content. And we'll share that in our show notes. But since getting back, we're registered. We're registered, baby. We got our trademark for Retiretech. We are officially official. So when we came up with the name and spoke with Mike Kalen, who's our guest today, about it about 2.5 years ago, we knew it was something good. But when you get it registered, it feels even better. And because of that, we figured let's do a re-release. So we have an updated map coming out the month of August. So we'll be excited to share that through our networks as well.
Yeah, great. Thanks. Okay, now for our special guest, I won't say grandfather, the father of Retiretech, Mr. Michael Kalen, is joining us. Otherwise, sometimes known as the CEO of Cover. Before we dive into Retiretech, Michael, maybe just catch everybody up on what's happening with Cover these days.
Yeah, I mean, look, we focus on simplification and digitizing life insurance, and we continue to take advantage of the trend where financial planning is being redefined as not just asset management. Like, you can't financial plan without an insurance plan. And, our partners are some of the largest wealth management firms, and we've done just an incredible job in the last 3 years in integrating our desktop solution for life insurance with now thousands of wealth managers in some of the largest firms. So, it's a lifetime journey, but we're making great progress. And, we know that any financial plan is stronger with insurance, life insurance or long-term care or disability, with those products than without it. So it's been a good run and continues to be a nice little business for us.
Oh, yeah. Congratulations on what you've done and the money you've raised. I think you've got a great cap table, outstanding cap table, in fact. And we were lucky enough to have you. I'll turn the time clock back. I guess that was, if I turn it back, Laura, I think the time, it would have been 2020, right? I think summer of 2020, the pandemic hit. Mm-hmm. I think a lot of the assumptions and that we had built our incubator around at that time suddenly didn't apply anymore. And Mike, you joined us, and maybe talk to us about it. You spent time with us, kind of thinking about how do we refocus our innovation efforts on the annuity and the retirement space? Where was the white space? How would we activate it? Do you want to just take people back to what you're thinking and how we approached it?
Yeah, I mean, look, there were, I'd say, two main themes. So first of all, 4 years ago, the two main segments for innovation were titled InsurTech and FinTech. Both became huge, multi-billion-dollar areas of innovation, and both touched on retirement planning, but didn't focus on retirement planning. And that was the first impetus, is could we come up with a theme that more tightly defined innovators that were developing technologies or products or solutions that spoke specifically to retirement, wealth decumulation, guaranteed income, better planning for retirement. So I think that was the first trend we noted. And then the second was the product itself, annuities, which, as we all know, has become a growing and in some segments, preferred product solution to solve the retirement income need. That product line and those insurance carriers who back the product were looking to move the discussion from a product focus to a solution focus. And we know that a product purchase, when it comes along with better transparency, better data, better modeling, easier ways of doing business than the old paper application, reducing the friction, building products that could become fiduciary friendly, we knew that carriers would be interested in the topic also. So those were the two things. And I think what you've done with this, Paul and Laura, in the last 4 years, I think shows that there's a real niche here to continue to focus the conversation more tightly on those companies and those solutions that are solving the retirement problem.
So, Mike, I think that, first of all, thanks for coming back on the show. I couldn't agree with you more. I think solutions that are incorporated into a broader plan, are beneficial for any number of reasons: customer satisfaction, compliance, and the list goes on and on. I'm very, very curious to get a sense for, as you moved along, have you started to see carriers develop products that sort of reflect the the integration with planning, as opposed to having them sort of structured more for an independent sale?
Well, I mean, certainly the last 18 months have been favorable to annuity manufacturers because of the interest rate environment.
Well, that's for sure. Yes.
Higher interest rates mean better products for customers. Higher interest rates mean more juice into the retirement product. So the fact that crediting rates, guaranteed income, living benefits, they've all improved in the last 18 months. And I mean, the result of that shows, right? Because the products have grown 35% a year in the last 2 years. And that means adoption is up. I mean, in addition to the products being better, the integration of those products into the digital platforms that help distribute the products, and utilization of electronic applications and more frictionless ways to get products approved and through compliance, all that has seen advancement in the last 18 to 24 months. And I think it bodes really well for insurance carriers that back the products, bodes well for the financial advisors that are increasingly adopting the products, and then, of course, for the customers that have chosen to buy the product. So, I think it's been a great run for annuities and how the technology space has helped distribute those annuities.
So, with respect to one of the last things you said there, which is sort of the increased adoption by our advisors, and sometimes on this show we talk about advisors as, we say advisors, we mean insurance agents. Sometimes we say advisors, we mean sort of RIAs. And I assume that you were talking about, or you were including RIAs in your comment there. I'm curious how much you think things have changed philosophically in the RIA space, because obviously the products have become economically more attractive because of the interest rates, but there's historically been some philosophical resistance in the RIA community. So I'm very curious to hear about what you're seeing in terms of greater adoption there philosophically, and what more can happen there? Yeah,
I mean, we could talk the whole time about the shift in advisor thinking. The way that I think about it is there are very few insurance agents only left in the world. Obviously, the gold standard for advisors or advisor teams is to be a registered rep with a broker-dealer, a registered investment advisor, and a licensed insurance agent. And if you're those three things, you can offer every product in the market, and you can offer both fee-based and commission-based products. That segment of advisor has grown, but the fastest growing segment of advisors are insurance licensed and RIA only, where advisors are focused on managed money and insurance solutions. And if you look at where a lot of the growth of annuity sales are coming from, it's from that segment of advisor that is managing money, right? They don't have to pick stocks and bonds. They're managing professional money managers in a managed portfolio. And because they're licensed in life and annuities, they can bring protection products in. And even within that segment, for advisors that don't want to take commissions, because they fear that there's a perceived lack of objectivity. Advisors can now represent annuities in a wrap fee environment so they can maintain commission neutrality in with their clients. So, yeah, I mean, there's a lot of trends there. But again, it's all favorable to bringing annuity products into the forefront of planning, where more advisors can now offer these products if it fits well to a client solution.
Yeah, well, okay. I think where we always gravitate to, Mike, or we want to say, well, who won? And I would say, if I look back, I'd say there probably aren't necessarily clear winners, but I do see sectors that made an awful lot of inroads into the retirement space. And my list would be some of the platforms that actually were around for a little longer than even the InsurTech phase. Like I think companies like Annuity Rate Watch, Annuity Genius, some of the quoting platforms I've seen make remarkable strides in the information they're pushing through, how they're pushing it through, how you can access it. You agree, disagree? Are there other sectors we should be talking about here?
I mean, you hit many of them, right? Information is power, and Annuity Rate Watch is a great example. Small little company had invested in data. They collected more data on carrier products for comparative analysis than anybody. And what they've done, utilizing some pretty straightforward technology now to help advisors pick the right product for their client, is fantastic. I mean, the Annuity Genius team. I mean, if advisors haven't looked at that toolkit, it is an extremely affordable way to bring better decisioning into their product choice process. Right Capital that can look at features and benefits of an annuity. I mean, they power decision making, and in a world where advisors have to hold themselves to a higher standard of recommendations, those product comparison tools are invaluable. So that transparency has been key to fueling the growth in annuity sales.
It's interesting when I went back, and I have to give a shout out to Reimagine's intern this summer, Will Levy. He did a great work looking at a lot of the data, and some of the things that we noticed in looking at the map is the amount of change, right? So we talked about the power of data and how data informs decision making. It informs a lot of what happens in this space, much like many others. And I noticed that there was a lot of morphing, whether it was new products, whether it was solutions being introduced. There were some mergers, there were some absorptions, there were doors closing, new doors opening. So even in the short amount of time between the original map and the one that we just refreshed, there's a lot of change. And in many conversations that we have, we talk about the industry being one that is set on decades and decades of experience and decades of behavioral impacts. But I guess, a question, Mike, because of the work that you do with Cover in the larger space, how do you think this conversation is going to end up, say, 2 years from now, when we talk again and we talk about the refresh of this map? Do you see things like AI or that type of technology influencing what people are doing down the road here?
Yeah, I mean, I think AI is still finding its way. And I think AI will emerge slowly and with a lot of customer disclosure. AI used the wrong way could be a dangerous tool for the financial services industry. However, AI enabling better decisioning because it can do some of the pre-sorting and eliminate just noise and options for advisors to do their work, I definitely think is going to emerge rapidly. I think the insurance carriers still hold a large part of the opportunity to bring innovation to the marketplace, right? Their decisioning on which tools they're going to adapt, which digital application process, how they're going to streamline suitability, where they choose to invest their venture capital dollars in new startups. I think they're going to continue to have a big role. And of course, the providers, the networks of advisors that are going to continue to move towards financial planning are going to continue to have to face drawdown or decumulation as baby boomers age. They're showing that they're going to be big players, and their tools are adopting as fast as anybody's tools. I mean, if you look at large players like Schwab or Fidelity and their retirement solutions, when they aggregate assets for clients, they used to focus on portfolio return versus the market. They're now starting to focus on income generation from your portfolio versus return on your capital from year to year. So, yeah, I think that all those trends are going to continue to come to play for the Retiretech space.
Yeah, it's interesting. Yeah, I've got a couple of accounts at Fidelity. I think they've done a really good job in aggregating information and showing some of the income that's available for my portfolio. Still a long ways to go, but I think they've taken some big steps in the right direction. One factor I'd like to talk about, and Ramsey, you're going to have an opinion on this one, is the impact of regulation over the next 5 years. Now, I'd say between when Laura, we did the map back in 2020 today, I think the regulation was a wash. The two sets of rules or regulations came out, I think, that had an impact on us were one, the Secure Act. Ramsey, I think that opened a lot of interesting opportunities in the 401k space.
I'm a big fan.
Yes. The second one was sort of like the concert that keeps getting canceled. The DOL rule, which would have would arguably might drive a lot of people to have more need to use more information to make more data-driven decisions. Doesn't look like we're going to get there. Now, you mentioned AI. I don't know. Is regulation going to slow the transition? And slow the adoption of the AI, maybe for very good reasons. What are we going to say, Mike, about regulation 3 years from now and the impact on this field?
Look, I think relative to regulation, I think we could count the DOL out on the canvas. I don't think there's going to be a fourth run for the DOL, but the riplets of the effect of the fiduciary discussion are still being felt. And other than commission disclosure, most of the firms that are overseeing recommendations follow best interest guidelines and require it as part of suitability. So I think the DOL has actually left the industry stronger, and self-regulation is always the better path. So I think even though the DOL as it's constituted is not going to reemerge, I think the firms that control the actions of the RIAs, the insurance agents, and the registered reps have adopted many of the principles, and that's going to be good for advice. And again, technology, back to the points that we've been talking about, technology-enabled advice, whether it's through rate comparisons or features and benefits aided by technology, whether it's purely AI or just guided advice, that's here to stay. And that is the big industry right now. How do these tools improve decisioning so human beings can make the best recommendation? And I think when Laura comes out with her roadmap, a lot of the things you'll see on there are in that regard, right?
So look, I think regulation is very interesting because many of the most important tools that we have in the retirement industry came out of landmark regulation, the 401k plan, the rise of mutual funds and target date funds in 401ks, all sort of came after sort of certain legislation that kind of opened the gates. And that's what's interesting about the Secure Act, both 1 and 2, is that for the most part, what they do is they actually have reduced hurdles to getting to the right answer. And they were bipartisan. So they got very strong bipartisan support. Now, the DOL rule, which has come and gone in several iterations at this point, was clearly partisan. It was predominantly came from Democrats and the times that so when Trump came to office, he essentially directly or indirectly decided not to enforce it. And now we're back under Democratic regime, and the DOL rule has come back to life, and then we'll see where it goes from here. I think that the intent of the DOL rule, in the sense that it is a gravitational pull towards better disclosure, towards best interest standards, I think is quite good. And so to Mike's point, like that whether or not the DOL rule ends up being the law of the land, it has actually nudged an entire industry in what is a good direction. But I think, though, this difference that it was clearly not a bipartisan effort on the one hand, and two, in many ways, it made everybody's life harder, right? And not just that, but took a lot of pages to describe how to do that. Right? I think that laws and new initiatives and legislatively that can both reduce barriers and be bipartisan and ultimately help consumers get to the answer they need, I think make a lot of sense. So certainly, again, I'll say the intent of the DOL was good, but obviously it's just not. It has really been fraught with obstacle over the course of the last years.
There's been a great conversation. I think we could probably make an episode out of about 5 different topics, which we should, Laura.
Absolutely.
So, Laura, bring us home. Tell us what's next, how to find out about all this good work you've been
absolutely. And, when some things take many pages, others only take one. So to look at the Retiretech map and its latest release, check the show notes or head over to imagine.nfg.com and you'll find it there. But, today was a great conversation. And again, Mike, it was wonderful to hatch this back a few years. And I can't wait to see where we're going to be a few years from now. So Mike, Ramsey, Paul, thank you so much for talking Retiretech today with us. Thanks to all of our listeners, and tune in next week for another episode of That Annuity Show.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more information at thatannuityshow.com.